Hello, I'm Marilyn Palmer from Right at Home Realty, and this one is,
Maria Petza from Your Mortgage Connection.
and we're here to talk about the bank mom and dad. So recently I read, and I'm going to read this article, so I'm sorry, I'm going to kind of sort of read it and kind of look at you. With the ever increasing average selling price going nuts in the market, some people ask, how do people afford a house? Some of the people and the industry say the bank of mom and dad. However, Ipsos Reid was brought in partnership with TREB and released new numbers saying that these down payments account for less than what people perceive. In fact, the figures have stayed consistent over the past 6 years. The proportion of down payment gifts make up 11% of the payment sources. The savings from RRSPs make up the bulk at 35%, and equity from the existing property 27%, and finally savings from within the RRSP and other, don't ask me what the other is 14% and 13% respectively. Hello.
Hi. So you touched on some key things. So historically, I'm not sure about all the historical numbers. I know that for first-time home buyers, they've increased the RSP home buyers plan. So it used to be $25,000 per applicant. Now it's $35,000. So that can equate to why, you know, a significant portion is coming from an RSP contribution, RSP account. Yeah.
If anybody hears that sound, she's got the fan on. Go on.
My apologies, everyone. It's Monday Madness. So again, $35,000 per applicant for RSP withdrawals is eligible now from a home buyer's plan as a first-time home buyer. So that gives them a little bit more leeway. I would still say that on average, even though the average is still the same, there is significant down payment is coming from gifted funds from mom and dad. I think
more than what.
Well, from what I'm seeing, first-time home buyers, a lot of them are getting definite gifts from because they want to either in order to go in. We talked about this in a previous episode, but in order to go in with, you know, over your 20%, so you don't have to deal with CMHC insurance, and maybe trying to go in firm, you need to have a significant down payment. So gift from mom and dad guarantees that, helps that situation. So especially for first-time home buyers, with the buying up, is that what you call it, when they're upselling their property or buying their property, if you want to call it,
move up. There you go.
So Monday Madness. So you know, with that situation, sometimes it's because the property does not appraise for the value, and so they need that extra funds because the lender will only give you up to the appraised value. So that's another reason why you're getting gift from mom and dad. So one is to help them be able to buy at that multiple offer and you know, exceed that original list price, which we don't know if is real or not. But having said that, if they need that extra 50,000 to be able to like just boost their purchase price so that they can make that offer firm and know that they go in and get that property that they really want, then mom and dad is helping out. Mom and dad is helping out, whether it's a gift, you know, cash outright. Sometimes mom and dad is taking money from the line of credit. So there's a lot of different variations there of what the definition of gift of mom and dad is. But as long as it is a true gift, the lender is not concerned about the parents paying it back, as long as it is not a loan to the applicants, for sure.
Here's some interesting fun facts. IG Private Wealth Management found affluent Canadians having at least 1 million investable funds is affluent, give on average $145K to each child as a gift. Another CIBC report found that 30% of first-time buyers and 9% of move-up buyers received some help from family to get into the market in 2020. Some first-time buyers receiving an average gift of 82,000, and move-up buyers receiving 128,000.
Those are big bucks.
I know, I
Yeah.
know.
So kudos to all the moms and dads that can afford to do this. Dealing with clients who have multiple siblings, children, and they just can't be able to do that for all their kids. So they just don't do it at all. But some parents have actually taken a line of credit on their property so that they can help their kids get into the market as a first-time home buyer and basically give them some of their inheritance early so that they can get there.
Do you deal as a mortgage broker, do you deal with the parents at all, or no? You're just, that's it.
Yes, usually when there's gifted funds, it needs to be very clear as to, confirming that they're gifted funds. There's no other sidebars that are being had, because a lender, if a lender discovers that there's some sidebar transactions that are happening, it could cancel the deal.
What's a sidebar?
Sidebar? Well, so I don't know if we want to allude to this into our next episode, but
well, we're talking about it now.
okay, so a sidebar can be that a partner or partners or husband and wife can go in and purchase something. Parents say that they're gifting them funds, but then they do a sidebar and say, no, you actually have to pay me back.
Oh, okay. All right.
Yeah.
Okay. Yes. So we're going to do that in the next episode about the demographics of the bank of mom and dad and what can happen, what needs to be protected, how you're going to protect yourself in the case of if you're going to get divorced, whatever. And that will be next episode. Now, if you want to know that before the next episode, I'm Marilyn Palmer from Right at Home Realty. My number is 416-995-2187. Or better yet, you can talk to Maria
Petza, Go Mortgage Connection, 416-254-8401.
Hey, I hope you're thinking that this is really, really benefiting you. And if so, please call us and let us know.
Yeah.
Thanks again.
Thanks,
Take care.
guys.
Bye-bye.
See you next week. Bye-bye.